everyone. Happy Friday. It's Kristen Williams with the Williams team in Austin, Texas. Today I'm going to share just a little bit more globally, economically on what's going on because we're on the tail end of what we have is our fall convention with Keller Williams. We call it Mega Camp. And Gary was just talking a little bit about the economics of what's happening that impacts housing, right? So we have so many factors that impact the housing market. So it's not just housing's up, housing's down. There's, several factors that are a result of housing being up or down. And the main one is the fact that interest rates and the cost of borrowing money continues to remain relatively on the higher side, and affordability is a challenge for a lot of buyers because home prices have come down. Nationally, they've come down. In Austin, they've come down around 22%, but they're still higher when you compare that with an interest rate. But the problem that the Fed is facing is that inflation hasn't really come down at the level that they really need it to come down so that they can lower the cost of borrowing. And now we have some new unemployment numbers that have come out that unemployment is rising. So the Fed is always looking to stabilize and balance the economy. But right now, they're also looking at, well, if they're going to balance the economy, which do they do first? Do they try to go after fixing unemployment? But if they do that, what happens to inflation? Or do they continue to try to fix inflation numbers, which haven't gone down at the level that they want? And then we have the cost of borrowing money, which remains high. And I know there's been a lot of pressure to lower interest rates, but one thing usually impacts the other thing. So right now, he just feels like the economy is in a little bit of a conundrum. When rates come down, the demand to buy housing is probably going to go up significantly. If and when that happens, which we know at some point that will happen, then we'll probably be in a state of climbing house prices, which probably wouldn't be great for the housing market. But at the same time, having higher interest rates isn't great for the housing market either. So we're just still in a little bit of a plateau housing market. There's still a demand for housing. Homes are still selling. They're just not selling at the level that they were. So nationally speaking, the peak of our real estate market in the United States, we sold about 6 million houses, 6 million homes sold in 2020, and we're projecting right around 4 to 4.1 million houses sold. Last year, that number was about 4 million houses sold. So we are about 2 million homes sold over the last 2 years compared to when we were at the peak of houses being sold. So we do have a pretty significant number down in home sales. And so it's just a matter of when will rates come down so that demand for housing increases, but will that demand for housing cause prices to skyrocket, which we don't really want. We need to have a really steady growth in house prices. We'd like our interest rates to come down some, but we also don't want to be in a market where, like in 2021, we saw people paying $200 over asking price to get a house and waiving appraisals and waiving options that didn't put buyers in a really good position either. So right now, there's still a lot of opportunity for buyers, but we are at a point where interest rates just have not come down, and they just don't look like they're coming down anytime soon. But if it's a good time to move because just your family situation makes it a good time for you to move, there are a lot of options out there. There are a lot of houses. The inventory level is at the highest it's been, and at some point we know interest rates will come down. They're going to have to at some point, and that's a really good time to plan on a refinance. So there's a lot of really great options. A lot of sellers are offering concessions to buyers to do a permanent buy down. We've talked a lot about a rate buy down, which would buy the rate down for a year or two. But now what's really popular is just a permanent rate buy down. And a lot of sellers are willing to offer those kinds of concessions for home buyers who really do want to make a move, but don't want to be impacted by a slightly higher interest rate and that slightly higher payment that it causes. So there's definitely a lot of options out there, but just economically and globally, everything is interconnected, and so that was just the point he wanted to make, is that everything being interconnected impacts each other. When real estate people say we want interest rates to come down, we have to realize that it impacts other parts of the economy. So looking at it more holistically, we really just want everything to be like a gradual, steady, nothing with a big, huge pendulum swing one way or the other, because that gradual steadiness will get us out of a slowdown, but not create like just a huge pickup as well. So we are always here to talk all things with our clients, strategize on what's best for you. Everybody has their own personal scenario. So if there's anything we can do to help you with your real estate journey, just give us a call. We're always here to have those conversations and connections, and always looking to serve. We have a great team of agents who are ready to help. Have a great weekend. See you next week.